Rates are going up, Shana. Yields are up this morning as the Federal Reserve kicks off that two-day meeting where we are expecting the Fed to actually take a pause. Your thoughts on what we'll hear from the Fed tomorrow, how it may shape the narrative for the next meeting?
I think we'll hear continued caution by the Fed about inflation. While CPI came in line with expectations, PPI came in greater than expectations. People are concerned that inflation is not coming down fast enough. We are still well above the Fed target of 2%. And so I believe that we are going to continue to hear from the Fed this focus on inflation, the fact that the employment markets remain very tight. So they will remain hawkish, in my opinion. And I think that'll only drive yields higher. And put this idea of rate cuts in the next 12 months to rest, I hope anyways. If there is not going to be a recession, which seems to be the consensus now I don't necessarily agree with that, but I also have no idea when there will be. I think that it's unlikely we'll have rate cuts within the next 12 months without some major economic downturn.
Yeah, I mean, you've got to think that things are slowing. The question is to what extent. Add on to all of that, ladies, this automaker strike, right? The United Auto Workers are basically threatening this is going to go on. The strike is entering a fifth day today. Ford and General Motors could be laying off 2,600 workers following these strikes. And UAW President Shawn Fain issued a deadline that if no serious progress is made by this Friday at noon, more plants are on the docket for strikes. Watch this.
I have been clear with the big three every step of the way, and I'm going to be crystal clear again right now. If we don't make serious progress by noon on Friday, September 22nd, more locals will be called on to stand up and join the strike.
Shelby, does this complicate things for the economy and your investments?
I do think that it is going to cause a complication for the economy. But when I think about our investments at Motley Fool Asset Management, a few of the reasons why we keep our distance from these big three is because it's incredibly capital intensive, very, very cyclical business that's very sensitive to all the inputs. And in this case, the inputs are going to be labor. And when we sort of combine those things together, we see a weakness in one of our main categories as a team, which is looking for growth companies. And so while there is going to be a little bit of an issue for the economy if there is this really large strike, because of course, supply and demand, if there's a slowdown in production, it could raise prices for individuals who want to purchase these vehicles. When we look at our portfolio, we sort of see this is something we usually want to keep our distance from for exactly this reason. When it comes to the allocators, they've got a big job in front of them. They have to find a deal for their employees that are unionized, for the customers, and for their stakeholders. And so that gap between a 20% and a 40% increase is really going to be weighing on them right now.
Well, I just spoke with David Towell, and he said Tesla is a buy in all of this. You agree?
Yeah, I think Tesla is definitely in a great position. Now, there's a lot of things that we could say about whether or not they've got the top-notch allocators there. But when we think about the fact that their production is at this point nailed down, they're definitely in a comparatively stronger position compared to the Detroit Three.
Shana, real quick, your thoughts.
Yeah, I agree. My bigger concern is that you have the writers' strike, you have the potential, you have this auto workers strike that's not going anywhere. The writers' strike has been extended and a potential government shutdown. Those are three bad things to happen all at the same time, which will absolutely impact the overall economy at large.
Yeah, the Journal wrote about that yesterday. Shelby McFadden, Shana Sissel, great to see you, ladies. Thank you.
Thank you.
Thank you.
All right, we'll take a short break. A spending